Good afternoon, everybody. My name is Pete Renzulli, Class B member, T3 Trading Group, and I'm bringing you the daily recap here on Friday afternoon, November 9th already. Hard to believe how fast this month is going. We actually had a tale of two tapes today. It's very, very interesting. We had said in the morning call this morning that quite a few stocks were getting a little bit extended to the downside. Not necessarily that we were looking to be long aggressively by any sort of the imagination, but the upside potential to selling short was significantly diminished based on the volume to the downside and the distance quite a few stocks have moved over the last week or so. And turns out that was a pretty good assessment pre-market heading into the day and how to manage your expectations. There were also quite a few stocks that were coming into significant support levels where you might have been able to, as Scott terms, make a tactical approach to a possible long as opposed to a portfolio approach. And that actually turned out to be a pretty good idea this morning as well. The only problem is that, as you can see here in the spiders, and I guess we'll pull it up to show a tale of two different environments unfolding in the market today. We had a really nice push right out of the gate. The low was pretty much made in the first 5 minutes of the day, and spiders here had roughly $1.80 push off the lows, which is a phenomenal move considering everything that's happened over the last few days since the election. But ultimately ended up trading in the middle of the trading range by the end of the day. Another president came on in the middle of the day, had a thing or two to say about taxes, and we kind of just meandered around in that range after he spoke. So when all said and done, the spiders finished up maybe a quarter, maybe a little bit less than that. So encouraging, if we go back to the daily chart, that we had some pretty good volume on a day that we closed above the open. However, you can't like the fact that we closed that far off of the high. So looks like we, for at least for a day, we stopped the downside pressure, and there was some opportunities to trade from the long side today. However, I think that until we see differently, it was nothing more than what you might term as a momentum opportunity to the long side. And you really shouldn't have been looking to build positions. I actually had Mark Sperling here in my office today. Everybody knows we're not back in New York City yet, in the office downtown, and all he kept talking about this morning was the tape still feels heavy, and when I have profits, I'm taking them. I'm not looking to add to any positions. And he might have been trading around a core position, but for the most part, it seemed like he was looking to trade for cash flow right now, and I think that's the good idea on the long side in this tape anyway. Getting back to some of the market leaders that we normally keep an eye on, again, we'll go down to the 15-minute chart. Apple, phenomenal. Basically a $20 bounce right up until 1 o'clock today, and then kind of leveled off. That was very, very encouraging to see. We had, coming into the day, we kept going back to the weekly chart where we were looking at some support, which was basically the 528.66 level. And we zoom back out to today's chart. Today's low is 533.72. So it came close. $5 for Apple is usually what it does, and you can see here within a 15-minute window. So that's a pretty close push to the downside. And the fact that it actually closed in the upper third of the range, that's encouraging. I'm not saying get in there and believe happy days are here again for the stock, but it was encouraging to see. Now, again, I'm using the exponential moving average here. If using the simple, it penetrated pretty deeply, but I'd like to see it at least get up to this 574 level, as Scott keeps talking about. A lot of the stuff in the market that penetrated on the downside in June, once we got back above the 200, we had a pretty nice multi-month run, so that's what we'd be looking at in a lot of these stocks to see if we get that same kind of price action. Qualcomm, which had a huge day yesterday, pulled back on the earnings inside day today, so it actually has now held the gap for a second day, so we'll be looking for an inside day breakout in that on Friday. Something that was very encouraging today, this TSM actually broke out to new highs today, and almost 12 million shares. That's a pretty good looking breakout there, all things considered. And you can see here it's actually new 2012 highs as well. So keep TSM, Taiwan Semiconductor, on your list for Monday. Google, basically same thing as Apple. A little bit of a down move. Bounced this time, held the 200 EMA, held yesterday's low, and a little more encouraging than the market itself. As we covered there, you can see it's still closing and hovering in the upper third of its range, very much like Apple. So that's actually a very, very good sign there from two two leaders in the market there. Another interesting one today, AIG perfectly hit the 200 EMA this morning. Actually, the low of the day, held it and closed near the highs. Again, not necessarily long, but you need to know the significant reference points that stocks hold. So if you're looking to trade this stock long, you got a little bit of support below you here. With the fact that we held the 200, there's a lot of room to go back up to 38, the first level you'd be looking for. Not so much here, but here where you got the dual moving averages just around 34. So you do have some room to go if AIG does catch a bid on Monday. Goldman Sachs was very nice to get a little red dog reversal this morning. You can see two closes to the downside. Again, zooming out to the 15-minute chart, the intraday chart here. This is the low of yesterday. Let me just draw that across there so you can see it. There's yesterday's low, traded below yesterday's low, got back in. Even if you had a conservative entry and waited for it to get back into the previous day's low, you still had $2, $2.50 in potential there, just waiting for it to take the conservative entry. And if you go down to the 5-minute chart, the conservative entry would have been right here around 9.45, 9.50. Maybe you would have risked about 50 cents, but it actually ended up having a nice push through there after that. Yahoo's still holding up there pretty good. 4 dojis, 3 out of 4 dojis up above the 80 MA, and a stock that's holding the 80 MA to the upside in this taper ab right now. That's some pretty good relative strength. We talked about Visa a little bit this morning, bounced beautifully off the 21 EMA this morning. Again, hold it as today's low, and that's really what you love to see, where you push down, hold it, and make the lows in the morning, especially if you want to be long. And then really nice $4 bounce off of that. I'll be looking for that to follow through on Monday as well. And last but not least, we were watching OIH the last few days. Again, you can see the head and shoulders top here. Look, doji, but it did have a pretty good intraday. We ended up, if we look at the 15-minute chart, we actually ended up having a really powerful move off the lows. And again, when the president talked right around 11 o'clock, things got a little squirrely, but encouraging to see decent to good volume and a reversal here. Again, not going to call an entire change of trend back to the upside, but it was encouraging. So now what's going to be interesting is to see if we have a couple more big green candles to the upside and leading to a pause for us to make a run into the end of the year, or do we consolidate, go sideways here, looking for another push down. So that's the price action I'd be setting up for myself. What type of days do we have in this consolidation / pullback after those two vicious selling down days? Today was encouraging. What we'd like to see is a move higher. We would not want to see a move sideways if you want to be bullish. We'd rather see it bounce higher and then flag. So 2 different price actions for you to map out. All right, so we're going to call that a week. Hope everybody had a great week. Please have a safe weekend. Everybody here in the Northeast, hope you get back to hot showers and just the basic stuff in life that we've been used to so long. I think a lot of people out of this side of the country really can't fathom what some people are going through, and that's a couple of weeks later, and I still know some people that don't have power. So if you happen to be one of those people and you're listening to this now on your cell phone, I hope you get to take a hot shower real soon. Have a great weekend, everybody.
I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.